I've been in consumer lending business for almost 20 years. I used to work for Citibank. I was there. Before I left, I was the head of consumer lending for Asia Pacific. So I know consumer lending is actually a very attractive asset class. But in the past, only banks have access to it. Because if you think about lending or borrowing, typically you think of going to banks to borrow. And bank likes this type of asset because it's sticky, it's long tenor, it's fixed income, and it's very low volatility because of the diversification. When you lend to an individual, the average ticket size is very small, considering when compared to lending to a corporate. So the small ticket size allows you to lend to millions of consumers, which means you spread out your risk. So from a bank's perspective, they really enjoy this kind of consumer lending assets for about 150 years. So now in the US, they have in the last about 10 years or so, they have a new platform. Through fintech, they have this new online marketplace. Platforms such as lending clubs, Prospers are slowly acquiring some of the banking customers over, attracting them over. And the reason they can attract the borrowers from bank and convert their balance to the platform is because they operate on a fintech platform. So they're very cost efficient. Compared to a bank, if you're in a bank, you have heavy infrastructure like branches and controls, operation teams and all of that. So that makes the cost very expensive for a bank to lend to an individual. Whereas for an online platform, it's actually very cost efficient, so they can pass on the saving to the borrower. So over time, a lot of borrowers are being attracted to this US online marketplace. So they borrow from this lending marketplace. But they don't have, these lending places, they don't have deposits. They're not like banks. So where do they get the funding from? So they are actively looking for investors who are interested in fixed income investment. So they've been doing that in the state. And now, through this Phoenix Asia, we are an online marketplace platform, we can connect Asian investors to this kind of high-quality consumer lending fixed income asset. Anybody can go and invest, but there are a couple of hurdles that you need to answer. The first hurdle is which platform to select. There are about 100 different online platforms in US nowadays, so which is the right one to select? And once you select the platform, do you know how to underwrite? Do you know whom to lend to? Because investors typically, they don't have a consumer lending background, so they don't know what are the gauge for them to lend. And then, and when you lend to this platform, is there any transparency? Will you see the underlying asset? So typically, these are the major hurdle for Asian investors to invest into US. Despite in the US, we can see in the past 30 years, the return of the consumer lending assets is about 15% gross. And the losses is about, right now is 4.5%. Even during financial crisis is 10.6%. So when you have a gross return of 15% on average, and even in the 1 in 30 years crisis time, the loss is only 10.6%, it does tell you that this is a very attractive and healthy investment asset to go after. But Asian investors are still a little behind in investing into US, and the reasons are mainly because of the three that I just mentioned. Because they don't know which platform, they're not familiar with the platform, they don't understand consumer lending, so they don't know which customer to lend to, and they don't see the transparency. I think consumer will start to chase after this consumer lending. Investor will start to chase after this consumer lending asset. That will become more and more a phenomena, to the extent that maybe we will start to see some Asia banks participating in a form of securitizations, in a form of, so it's not direct lending, but more of the facilitating of the capital of this asset. So I think in going into next year, it's more of a market awareness. People are trying out this new asset class. But some of the more aggressive banks in Asia are also looking at this space and see how they can provide value-added service, such as securitization. So those could be another way that the Asia development could be.